Hey guys, it's Remo, and we've been getting tons of calls for the Forgivable Equity Builder program. So we want to put together a video to talk about, the highlights of it, and in my opinion, why I think it's probably not realistic for just about everyone, except maybe a selected few. So the program is through Cal HFA. It's administered through the state, and so the program, the intention is to give you a second mortgage that will disappear after 5 years. And so it's a zero interest. And if you stay in the home as your primary residence for 5 years, that 10% portion will be forgiven. So on the surface, it looks like a very attractive program. Definitely one that captures headlines and so forth. However, when you dive in, it just doesn't make as much sense for most people. So the biggest constraint is that your income to qualify for this program needs to be 68,000, let's call it 69,000 or lower, right? And so that's the household income. So if you say, okay, I'm under that, I check that box. Let's say I make 65,000, right? Or I make right at that 69, and it's 68 and some change, but we'll call it 69 for conversation's sake. You take that number and you get the monthly that you would need to make, which is $5,750. Well, the bank will typically lend you up to about 45% of that number. And in that case, for all your debt, you're looking at about a little under $2,600 for all your debt, assuming you have zero debt. And that's really all you're going to have, which is your mortgage. The max purchase price that you're going to be able to qualify for is $380,000. So the way the math works out is at $380,000, you get to 10% down, right? That means you're financing $342 at a 6% interest rate. Your principal and interest is about a hair over $2,000. Your taxes, your insurance, and then your private mortgage insurance. You're looking at a total payment of about a little under $2,600 to kind of match that. So this program will work if you can find a single family residence with no HOA at $380,000 or less. And you might say, well, where would this program work? Southern California, it's going to be tough unless you have a substantial amount that you're going to be putting down that obviously would get that purchase price to a higher number. But for most people that have limited resources, and that's why they're using this program, it's unfortunately not going to be able to really help you. Now, so that's my opinion about this program. However, there's other programs like the LA County Home Ownership Program that gives up to that 20% or $80,000 to $85,000 to a first-time home buyer as a silent second mortgage. Similar setup, but the income limit is more, which allows you to be able to buy more of a property or a realistic property than obviously trying to find something in Southern California for $380,000. In addition, the LIPA program, which is the LA City's low income, and then there's one that's also for moderate income. And what low income and moderate income is defined as is low income is 80% of the county's median income, moderate is 120% of the median income. So there's definitely other programs out there. It's just my opinion. The state program, the way it's set up, is it's going to be very difficult for anyone to be able to use unless you're able to buy a house in really California for $380,000, assuming no debt and assuming really good credit scores. So it might be difficult for most people. So if you're interested in those other programs, would like to know more information, comment below, send us a message, and we love the opportunity to kind of explain those programs and how you can purchase using those programs, which is, in my opinion, more realistic. We'll see you soon. Bye.